Hello everyone. Today we are doing the do-it-yourself questions given in our book. There are 3 questions given. Let's read the first one. The first one is Aslam, Jacob and Hari are equal partners with a capital of 1500 and 1750 and 2000. So equal partner 1:1:1. They agreed to admit the fourth partner Satnam in 2 equal partnerships. So Satnam is also going to be the equal partner. So the new ratio becomes 1:1:1:1. Okay. Upon payment in cash of rupees 1500 for 1/4 share of the goodwill and 1800 of his capital, both sums to remain in the business. Okay. The liabilities of the old firm amount to rupees 3000 and the assets apart from cash consists of motor 1200, furniture 400, stock 2650, debtors 3780. The motors and furniture were revalued at 950 and 380 respectively and the depreciation written off. Okay. Asset in cash in hand and prepare the balance sheet of the firm after Satnam's admission. So the question might look difficult, but it is not. Let's break the question and do it. Okay. The first thing is we will bring in Satnam as the new partner. So let's do the journal entry for that. Do it yourself, the first question. Yeah, the first question I'm doing the journal entry for bring in Satnam in. So what he is doing, he is bringing the first is cash account debit to Satnam's capital and to premium for goodwill. Now let's see how much cash. I guess 1500 and 1800 were the figures. Yeah, 1500 for payment of goodwill and 1800 for his capital. Yeah, 1800 for his capital and 1500 for premium for goodwill. That means he brings in total of 3300. Okay, this is for being capital and goodwill premium bought in cash. Okay. Now the next entry, what we'll do with this premium for goodwill, we'll distribute in the old partners in the sacrificing ratio. See, what will be the sacrificing ratio? It will be equal. Okay, we know the old ratio, we know the new ratio. Old ratio was 1:1:1, the new ratio is 1:1:1:1. So everyone will be sacrificing equally. So let's find out. I'll just find out here calculation of sacrificing ratio. Sacrificing ratio of the first one was, what was his name? Aslam, Jacob, Hari. Yes. Aslam, Jacob, Hari. So sacrificing ratio is old ratio minus new ratio. So the old ratio here was 1/3, new ratio was 1/4. Why? Because Satnam and all became equal partner. So 4 minus 3/12, 1/12. And equally everyone will sacrifice 1/12, 1/12. So the sacrificing ratio becomes 1:1:1. Let's see premium for goodwill. Account debit. Okay, how much was premium? 1500. Yeah, 1500 was the premium to Aslam's capital to Jacob's capital and to Hari's capital. All three are sacrificing partners. Okay, how much? This 1500, and sacrificing ratio 1:1:1, that means everyone will get 500. Now this is done. Okay, we understood half of the question is done. How? We had to prepare the balance sheet also and find out cash. Now see, they have given us the figures of assets and liabilities before the admission. So we need to prepare a balance sheet before the admission, because cash figure has not been given. If cash figure has not been given, how will we find out now? So first of all, before admission figures are we are going to write down. That's totally a different part of the question. So balance sheet I am preparing before admission. I guess a small balance sheet will suffice. Yes, let's see. Yeah. So, the liabilities amounted to rupees 3,000 and the liabilities 3,000. Okay, let's first write down the liabilities. Liabilities amounted to 3,000. These were the original capital of 1,500, 750 and 2,000. So total 3,500, 45, 50, 250, 5250. Let me check. 1,500 plus 1,750 plus 2,000. Yeah, 5250. Okay, and then few assets are also given. What are the assets given? Liability written assets apart from cash. Cash they have not given, that will be the balancing figure. Motor car 1,200, furniture 400. Motor car 1,200, furniture 400. Furniture 400. Two more assets were given. Stock 2650, debtors 3780. Okay. Now, ideally the balance sheet should tally, but I guess it will not tally because still the cash one is missing. Okay, let's see what is the total of liability side. 8250. Hopefully it will be less than this and the difference will be cash. So 1,200 plus 400 plus 2650 plus 3780, 8030 is the total. Ideally the total should have been the same. Okay, 8250. So the difference is cash 220. Okay, this is our balancing figure. Now we already understood the opening cash. Let's see. Still, now some revaluation had happened in our assets and liabilities. Let's do the revaluation. This will be journal entry number. This was 2. We are going to make journal entry number 3. Okay. So yes, let's look at the revaluations. Yes. Motors and furniture were revalued to 950 and 380. Motor was 1200, it was written down to 950, and furniture was 400, it was written down to 380. So 250 loss on revaluation here and 20 loss on here. We have to written down, yes. 250 and 20, motor car and furniture. And this revaluation loss will be borne by the old partners in the old ratio. So, Aslam's capital account debit to revaluation account. See, now revaluation was debited here, revaluation is getting credited here to the amount of 270 and will be distributed in the old ratio of 1:1:1. Okay, what is this? This is the old ratio. Okay, it was debited. Now revaluation is done, but because of that there were certain changes in the capitals. Okay, the capitals were reduced and were increased also because the goodwill amount was given. Now what we'll do, we'll make the final balance sheet. This is the balance sheet after admission. Okay. So, motor car, earlier it was for 1200, but it was revalued to the extent of 250. So now it's 950. Furniture, earlier it was of 400, but 20 rupees revalued to 380. Okay. Debtors and stock had no change. Okay, what was it before? Debtors were 3780 and 2650. 3780 and 2650. Yes. Now, cash. Earlier it was 220, that balancing figure, plus he bought 18 and 15, 3300 he bought. You don't have to write that in exam, but I'm just giving you an idea why this 300. So 3520. Yes. On the liability side, there was no change in outside liabilities, but capitals changed. So Aslam's capital, it was earlier 1500, then he got rupees 500 for goodwill, but revaluation loss 90. So 2000 minus 90, that comes to 1910. Then Jacob's capital, was 1750 plus 500 he also got for his share of goodwill, and 90 minus. So 2250, I guess 2140, let me check. 1750 plus 500 minus 90, 2160, sorry. And Hari, I guess he had 2000 rupee capital. Yeah, 2000 was his capital, and 500 also he got. Yeah. 2000 plus 500 minus 90, so 2410 is his capital. So the total capital comes to 1910 plus 2160 plus 2410, 6480. And there was some outside liability as well. There was no change in that. Liability is 3000. No change, 3000. Let's see whether our balance sheet tallies or not. If not, obviously we have committed some error. So 6480, so 9480 here. Let's see, 950 plus 380 plus 3780 plus 2650 plus 3520. Oh, 11,000. Oh yes, has to be 11,280. What is the mistake that we have done? See, we only wrote the capital of 3 partners. Now the 4th partner is already there, na, Satnam. Okay, even his capital needs to be accounted for. So one more partner. Okay, liabilities I'll write down later. Of 1800. Why 1800? Because 1500 was just goodwill. Okay, that has already been distributed. Now liabilities of, now let's see whether our this tallies. 6480 plus 1800 plus 3000, 11280. Yes, the question tallies. Okay, this is how we have to do our first one. I'll show you again what all things we did. first of all, we admitted Satnam, okay, and we accounted for his premium for goodwill. Then the premium for goodwill was distributed to old partners in the sacrificing ratio that we calculated here on the rough, but it was evident what was the ratio. Then we wanted to know what was the cash figure in the before the admission. So we found that out, that was 220. And then what we did, we revalued the assets and distributed the loss on revaluation. After that, what we did, we made the new balance sheet by revaluing everything. The assets which got revalued, the cash opening plus whatever more cash came in the business, the adjustments in capital accounts, and Satnam is also written, and the balance sheet, outside liability, and the balance sheet got tallied. Thank you. Not thank you. Still 2 more questions are remaining. No thank you. Now, let's look at the next question. Benu and Sunil are partners sharing profits in the ratio of 3:2. On April 1, 2017, Ina was admitted for how much share? 1/4 share, who paid 2 lakh as capital and 1 lakh as premium for goodwill in cash. At the time of admission, general reserve amounting to rupees 1,20,000 and profit and loss amounting to rupees 60,000 appeared on the liability side of the balance sheet. Record necessary journal entries to record the above transaction. So what we need to do before admitting her, these two things, general reserve and credit balance of P&L account, needs to be given to the old partners in the old ratio, because this belongs to the old partners. So let's see. Second, the first entry is general reserve account debit. Okay, it was, I guess, 1,20,000. Profit and loss account debit. It was, I guess, 60,000. To the old partners in the old ratio. The old partners were Benu and Sunil, and the old ratio was 3:2. Okay, 1,80,000. If I want to divide 1,80,000 in 3:2, so 1,80,000 divided by 5 into 3, 36,000 into 3, 1,08,000 and 72,000. Okay, okay. The old things are done. Now the admission. Okay, so cash was coming in. To who's the new partner? The new partner's name was Ina, and 2 lakh capital, 1 lakh premium for goodwill. Okay, so 2 lakh was the capital and 1 lakh was the premium for goodwill. So totally the cash that is coming in is 3 lakhs, and this premium for goodwill will be distributed amongst the sacrificing partner. Please remember what the word I am using. I am using the word sacrificing partner. In which ratio? Sacrificing ratio. So premium for goodwill account debit 1 lakh to, now we need to find out who are sacrificing. So is there any information given? We just know that Ina is coming for 1/4 share. Now who's giving how much is not mentioned. That means the old ratio becomes the sacrificing ratio, that is 3:2. 2. So we just have to do that and the question will be over. Yep. 2 B Benu 2 Sunil. Okay, 1 lakh in 3 to 2 is 60,000 and 40,000. Yes, and I believe the question is done. Is there anything else remaining? Let's check. Blah, 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 blah. Everything is done. Yeah. So it's a very simple question. I don't know why they gave this. Next thing is Ashu and Rahul. This is a good question again. Ashu and Rahul are partners sharing profits in the ratio 5:3. Gaurav was admitted for 1/5 share and was asked to contribute proportionate capital. Okay, very, very important things that they have given was to ask to contribute proportionate capital. Okay, the capital has to be in proportion, and 4,000 for premium for goodwill. Okay, the capital of Ashu and Rahul after adjustment of revaluation, goodwill worked out to be 45,000 and 35,000 respectively. Calculate new profit sharing ratio, capital to be bought in by Gaurav and record necessary journal entries. Now you have to be very careful, very attentive when you are solving this type of question. See, whenever proportionate capital thing is given, so one thing is clear, he has been asked to bring for 1/5 share proportionate capital. That means even the capitals of the old partners Ashu and Rahul were in proportion. Now let's check. Third one. Gaurav has been admitted for 1/5 share. Therefore, remaining share for who all were there? Ashu and Rahul. Yes, yes. Was 1 minus 1/5. That means 4/5 was remaining for Ashu and Rahul. Now, for 4/5 share, Ashu and Rahul's capital were how much? 40, 30, 70, 80,000. 45 and 35. Yes, correct, 45 and 35. Now, for 4/5 share, the capital was 80,000. Therefore, for 1/5 share, the capital should be, now what should be the capital? That is 80,000 divided by 4 multiplied by 5. Okay, that's just the reverse, multiply by 1/5. Okay, that's Ashu Gaurav's share. This 5 cancel. 20,000 should be the Gaurav's capital. Therefore, now we understood that 20,000 is the capital. New profit sharing ratio should also be in ratio of capital. Now, new profit sharing ratio is also in proportion of their capital which is 45,000 is to 35,000 is to 20,000. Okay, so 9 is to 7 is to 4. Yes, this is the new PSR. I guess we have to record the journal entry also for his admission and premium for goodwill. Yeah, new profit sharing ratio, calculated capital, calculated, record journal entry for the same. Yes, okay. The question is almost done, just the journal entry. 4,000 was the premium for goodwill, I remember. Yeah, 4,000 was the premium for goodwill. Cash account debit to Gaurav's capital to premium for goodwill. Okay, so he bought, I know that, now we know that he bought 20,000 and he bought 4,000. So in total he bought 24,000. This 4,000 is to be given to old partners. Premium for goodwill account debit to Ashu to Rahul. Now this 4,000 is to be divided in sacrificing ratio. I believe this old ratio is the sacrificing ratio. So 3 into 5. So 2,800. 4,000 by 5, 800 into 3, 2,400 and 1,600. Yes, and the question is done. Just look at it. Okay, this is the tricky part where because proportionate capital is given, so he has been admitted for 1/5 share. So what is remaining for the old partners is 4/5. For 4/5 share, their capital was 80,000. Even their capital should have been in the proportionate. So for 80,000, the ratio was 4/5. So for 1/5, how much should have been the ratio? So 80,000 as it is. This 4/5 reversed. This 1/5 just multiply. This is how you have to remember. Okay, if you forgot the unitary method, okay, what you need to do, whatever you have written here as it is, whatever is written here, opposite and multiply. And whatever, if anything is written here, multiply directly. If you remember this, make it a song and you will be able to know how to do it. Okay, thank you so much.